The typical Bay Area real estate summer slump didn't last very long this summer, and we're going to get into all of that data and why that's important for you if you're a home buyer or a home seller in today's Bay Area real estate market. Coming up on this Silicon Valley Snapshot. It seems like just yesterday we were talking about a potential market cool down heading into the fall and winter months of 2023, heading into 2024. But based on the data that I'm about to share with you right now, we're going to see exactly why that is likely not going to be happening anytime soon. But before we get into that data, before we get into the numbers, if you're a home buyer in today's marketplace and you're trying to figure out what the best strategy is for you when making an offer on a property, or if you're trying to understand a neighborhood better prior to making an offer in that particular area or city, you can text the word data plus the area or the neighborhood or the zip code that you're looking in, and we will get that information sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to understand what the right pricing strategy is for your property, you can text the word data plus your property address, the number down below, and we will get a comprehensive data set sent straight to your inbox. All right, so let's get into what you came here for today, which is the data. And then we're going to unpack all of this data and really start to understand what this means for you if you're a home buyer and what it means for you if you're a home seller heading into the fall and winter months here of 2023. Starting off with Santa Clara County. All right, so Santa Clara County pendings have been outpacing supply practically the entire year. And this continues to remain the case here in August, where we have 930 homes pending and 866 homes active. Now, if you notice in the summer, there was the possibility in July, it looked like we might be seeing a flip in the script here where supply might have started to outpace inventory levels. And we might have had the possibility or the potential for the script to be flipped in July of this year, where maybe we thought, just maybe, we could see supply outpace pending inventory, but that clearly did not happen. And in August, we saw a resurgence, as you might recall, in last month's Silicon Valley Snapshot, where we went over the data. I basically said that this was going to happen, where there was enough historical evidence to support that July tends to be one of the slower months, and typically in August, we see a resurgence in pending activities. And so we are seeing a widening in that gap, not a massive widening, by the way. This is a very small widening and not a huge differential between pending inventory and supply, but it's definitely worthwhile or worth noting that the trend is now going in the opposite direction. Going into the summer, we started seeing pendings and supply merge, and now that line is starting, or the delta there is starting to increase. And so look to see that delta increase heading into the fall months. That is very traditional. That is a very typical thing to happen, especially in Santa Clara County, where we see pending activity start to outpace supply even more in the fall months, and we start to see a better seller's market in the fall months than we do in the summer months. All right, now heading on up to San Mateo County. In San Mateo County, we are seeing a fairly stable market here in the summertime. Nothing to write home about, but again, nothing to be concerned about whether you're a home buyer or a home seller. There is a lot of predictability in the market right now. We see supply outpacing pending inventory right now. We have 512 homes active on the market and 366 homes pending. Now, if you look from July to August, not much movement there in terms of the differential or the delta between inventory levels and pending activity. So from a consumer perspective, it's a fairly similar market condition. Yes, we had more pendings, but we also had more supply. So the effect is net neutral. And heading into the fall, let's see how that continues to behave. We'll see how things start to fluctuate in San Mateo, whether we see inventory levels stagnate or we see them drop off. That remains to be seen. But we'll be sure to keep an eye out on San Mateo County as the fall continues to unfold. As we look even further up the peninsula, we have San Francisco, and San Francisco has been fairly steady here for the last couple of months. You look back till even March of this year, we have seen fairly consistent inventory to pending ratios, maybe fluctuations here of 5 to 10%, but really we're seeing a fairly consistent inventory level here in San Francisco ever since really like December of last year. And we'll continue to monitor that, see what happens here over the next couple of months. It's also worth noting that the pending activity dropped off a little bit here in the summer months, and we saw a little bit of an increase or a resurgence in the market in the buyer demand, specifically here in August of 2023. Now, let's see how this continues to unfold. But again, there's nothing happening in either direction right now with San Francisco to really say like, oh, it's going to get worse or it's getting better. Right now, it's just very stable. And I expect that to continue to be the case as we move into the fall months. However, there is one point here that I wanted to make. Typically, when we look at San Francisco, historically speaking, if you look back 5, 6, 7 years, the fall market actually tends to be the weakest market of the year for San Francisco. So let's pay attention. Either one of two things is going to happen. Either we'll see San Francisco's market continue to stabilize here in the fall months, or another possibility is that we have seen in previous falls inventory levels start to rise in the fall. And so let's pay attention specifically to inventory levels as we move into the fall months and see whether or not history will repeat itself again in 2023. If this were to happen, sellers will ultimately be at a disadvantage in San Francisco heading into the fall, winter, and even potentially early parts of 2024 if we see inventory levels rise significantly over the next couple of months here. Now let's cruise over the Bay Bridge over into the East Bay, starting with Alameda County. In Alameda County, we have 864 homes active on the market, 792 homes pending. So we are seeing inventory levels outpace demand ever so slightly. However, if you look back in July, we are starting to see signs of a potentially weakening market. But you compare that to what's happening in August, and we're seeing, okay, well, maybe that was a little bit of an overreaction. Now we are seeing the delta here coming together again, and potentially looking into the fall, we might start to see pendings outpace supply again. So we can definitely pay attention to that. That would be indicative of a very, very good seller's market. And we are not too far off away from that right now in Alameda County. So let's continue to pay attention to that. Again, this isn't very surprising given that we know traditionally the summer is one of the worst times in Bay Area real estate. And so I know this is counterintuitive and you've probably heard a million times, oh, the best time to sell a home is in the summer. But if you look back historically over the last decade and a half, the summer always seems to be the worst time to sell your home, even worse than in wintertime, believe it or not. And so this isn't super surprising. And to see a quick resurgence from July to August, everyone's out of town in July, everyone's doing their thing, buyers are not here, but then the buyers came back. And you can see that indicated in the pending activity from July to August. Buyers were out of town, now the buyers have come back. And the same story holds true in Contra Costa County. In Contra Costa County, we have 917 homes on the market and we have 830 homes pending. Now, if you look from July to August, same story. We see inventory levels rise. Okay, so let's put ourselves into the shoes of sellers real quick. All right, every seller is thinking, wow, summer is a great time to sell my home and I have all this free time. And honey, let's get all the things out of the house. We'll move them out of the house in June. We'll put the home on the market in July because, hey, it's a great time to sell. Everyone else is thinking like you, Bob. I don't know who Bob is. But then we move into August and then all of a sudden, less inventory, ever so slightly less, and more buyers back into the market because in July, everyone was out of town with their kids. They're off of school, 4th of July, Disneyland, Disney World, you name it. You probably went there this summer. And now in August, people are back and they're buying houses. And that's exactly what we're seeing in the data. It's too early to give any sort of real interpretation to this data other than what I just said, that historically speaking, this is very standard and very typical. But let's see how far the markets bounce back in the East Bay heading into the fall months, because it would not surprise me. It would not surprise me based on what I'm seeing right now in the marketplace, based on the activity level that all of my agents are reporting to me on a daily basis, based on the number of offers that we're seeing on a lot of these properties, and just based on the general consumer sentiment that we're experiencing right now in the Bay Area. You might be thinking consumer sentiment is low, but let me tell you, there are a lot of buyers out there who are very, very antsy to get into a house. I know this doesn't make sense, but I promise you, it is the reality of the situation that we're living in right now. And that is why I would implore you, when you're looking at this data, and if you're a home seller, I would look at this data and I would say, hey, the fear-mongering media out there right now that is trying to tell me that the world is collapsing and that my house is losing value on a daily basis is wrong, okay? And so if there's a panic there and you're like, oh my gosh, I gotta sell because my house might lose value, I would say that the only reason to sell right now is if you have to sell, right? Because I do believe the market will continue to bounce back in a big way. And if faced with the opportunity to sell now, or in 6 months from now, you're probably better off waiting for 6 months from now, because I think the market will continue to improve as time goes on. Now, if you are a home buyer right now and you're looking at this data, it's not going to get better for you. I'm sorry. It's really not. And for anyone that is sitting back there, armchair quarterbacking right now saying, oh, Danny's wrong, and oh, the market is going to tank, and the recession this, and COVID 3.0 that, I don't even know, right? But whatever reason you're telling yourself why this market is going to continue to improve over the next 6 months, and why housing prices will not appreciate consistently over the next 6, 12 to 18 months, you are unfortunately misinformed. And so there's not much that I can do other than show you the data, show you what's going on in real time, and have you make the decision for yourself. But based on what I'm seeing right now, based on what I know about history, and based on what I've witnessed over the last 18 months in terms of the resilience of the marketplace to extraneous happenings, whether it be the Fed increasing interest rates, or the economy being in a weakened state, regardless of all of the things that are going on around us, this market has proven to be incredibly resilient. And I don't expect that to change anytime soon. So if you're a buyer looking at this data and you're like, hey, should we wait until maybe like next year? The only thing that waits for you in 6 months from now is higher housing prices. And so there's not really that much of a reason to hold off anymore. But don't just take my word for it. Fortune magazine has recently published an article stating Goldman Sachs' predictions over the next 3 to 4 years for housing prices in the US. And in 2024, Goldman Sachs is predicting a slight increase in housing prices. That's nationally. Here locally, we've always seen the Bay Area outperform the national average. And so lots to unpack here, lots to think about heading into the fall. We're not quite sure what's going to happen. But if these trends are showing us anything, and historical trends that we've been paying attention to, and if the historical trends continue to play themselves out here in the fall market, then it will be a very good market for home sellers and a very difficult one for those who are trying to buy a home here in the Bay Area in the fall of 2023. Now, if you made it this far in the video and you're not yet subscribed, what are you waiting for? Click the subscribe button, hit the notification bell to get notified every single time we post a new Silicon Valley snapshot, and to stay ahead of the data and the trends here in the San Francisco Bay Area. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next video.